Guys, hello again. My name is Nick as usual, and so we are starting our stream trading psychology. Greetings from Russia, and welcome to this stream about, one of the most interesting topics, yes, in trading and in all of this. Well, as usual, so I would like to help me with checking the sounds and the video if everything's okay, if there are no technical problems. Please greet me somehow in the chat. Well, I see that somebody is writing already. Well, yes, and so just type something that the sound is okay. Well, you can see me, you can hear me without any technical problems, and we will start discussing another bias. Yes, well, if you want, or a mistake. Okay. Mm-hmm. Hello. Well, that's great. Mm-hmm. Hi. Can hear you. Well, that's great, Karen. Thank you very much. Mm-hmm. Mm-hmm. Hi, good evening. Good evening, Melvin. Good evening. Okay, guys. Okay. Great, great, great. Well, yeah. Well, yeah. So, actually, today, well, as usual, so the stream will be really short. Yes, we are taking just one problem and we are discussing it. Yes, and of course, well, after this, so I will answer all your questions. So if I can, I will do this. Okay, so great. We are going, okay, so from Tanzania. Well, okay, well, that's great. Hello, hello, hello to everybody. Well, that's nice. Well, today we are going to go through the following problem, ladies and gentlemen. So, well, actually, we are going to discuss gambling bias. Yeah, so gambling bias. So let me. Oh well, that's great. Oh well, let's. Okay, let me open this. Well, the gambler's fallacy. So look, what is the gambler's fallacy? So it is a belief, yes, a belief that the previous results, yes, affect the probability of future results, especially when they relate to recent events. So I would like to ask you the following question. So look, for example, so let's imagine that you are in a coin flipping competition. Yeah. So for example, with your friends or whatever. So actually, you uh, flip the coin. Yeah. So you throw the coin. So your friend wins if the coin lands on heads. And on the other hand, if the coin lands on tails, you win. Yes. So well, actually, so let's imagine that the coin has landed on heads 8 times in a row. Yeah, 8 times in a row. So your friend offers to bet you $100 that the coin will land on heads on the next coin toss. Yeah. So actually, your friend thinks that it is more likely that heads come up again. Yeah. So why so? Because before we had 8 heads in a row. Yes. But at the same time, you have the opposite belief. Yeah. So you think that there will be tails. Why so? Because uh, again, well, the previous 8 tosses, there were heads. So my question to you guys is the following: which one of you is right? You who believe that there will be tails, yes, or your friends who believes that there will be heads. Okay, so I remind you that the coin lands 8 times in a row on heads. Okay, so can you write your comments, your answers in the chat, and we will see. Okay. Mm-hmm. Oh well, in Egypt. Oh well, I see, I see. Well, I see somebody is joining us from India. Well, traders from India. Well, about indicators, any other questions? So guys, well, I will answer all these questions, but after the topic, okay? Both. Carmen is writing. Well, Melvin is writing that I can relate on this topic. Well, that's great. How I know? The correct time. That's a really good answer. Well, I'll explain to you this later. It's luck. You can't be sure. You are absolutely right. You are absolutely right. So, well, actually, what is the mistake? The mistake, well, you and your friends actually, well, here, both of you are wrong, yeah, because the probabilities are independent, yeah. So I did not tell you that, for example, we are like tossing this coin like 10 times only, yes, but actually, if we speak about like a game, yes, itself, so the probabilities are independent. So, well, as for gamblers, so for example, in casinos, so they prefer to, for example, they believe that on the roulette there will be like red. If there are like several reds in a row, yes, like 8, 10, well, their next belief, so they believe that sooner or later there will be like black fields, for example, yes, and this is a mistake. Well, as for traders, how does it affect on the market? Yes, and on the trader. So look, for example, you let's imagine that the trader, not you, so that the trader bought stocks. Yes, and let's imagine that the market starts falling down. So what does a good, not a good, a bad trader do in this case? Actually, some of the traders, they start buying again. Yes, so they start buying again. So in this case, the average price is lower, so psychologically it's quite comfortable, yes, but the market keeps going and going and going down. But still, traders believe that the more lower the market goes, the higher is the probability that the price will rise. But it's not so. Actually, markets, guys, so assets, they can rise and they can fall down almost for eternity. Yes. So, well, speaking about like there are plenty of such examples. Yeah. So plenty. So if we take like any shares, for example, or any, I don't know. So let's take, well, any currencies. Well, the market can rise for months or even for years, or vice versa. So it can falls down, for example. Yes. So the price can falls down for years. Yes. But still, well, some traders are in their positions. Yeah. So the same is true. So let's take, for example, Bitcoin. Yeah. Well, the price was like $20,000. Well, somebody bought Bitcoin for $20,000. Yeah. So now it's 5,600. Yeah. And still, actually, the price is going down. But some traders, well, I guess that some traders do believe that the more it goes down, the higher is the probability that it will rise again. Why so? Why so? So we have to analyze the situation, yes, and we have to try to trade following the present situation, yes, and following the so-called like fair price. Yeah, so let's say so. Okay, well, I hope that this is clear. Okay, guys. If there are any questions, please don't hesitate to ask, so I will be glad to answer. Bad connection with what? With financial markets? Well, it's not. Actually, it's not. Well, I saw such people, I saw such traders who like, oh, okay, so the market is going down. Okay, so let's buy. And so on and so on. Well, it will rise, so it's not a problem. Okay. I'm a total beginner. Well, Karen is writing, what's the best market to use? Chinese candlestick. Well, Karen, this is a really good question. So, well, speaking about charts, yes. So let's go to the chart. Well, look, we've got like several types of charts. Well, in my opinion, you can use Japanese candlesticks or you can use bars. Both are good. Yeah, so both work well. Yeah, well, speaking about indicators or something like analysis, well, in my opinion, for beginners, well, moving averages are the best. Yeah, why so? Because they're simple, they are quite objective, and actually they give you quite good picture, yes, of what's going on financial markets. Also, please learn how to set levels, support and resistance levels. Yeah, and this is a big problem because this is subjective sometimes. So, well, for example, in the morning, so we were looking at Australian dollar and the United States dollar. So this currency, fortunately, is quite predictable. So, for example, if you look at the charts for a long period of time, you see that the price is going down and down and down and down. So here I can draw this resistance line without any problems. Okay. Well, in this case, so for example, I saw that it bounced back once, it bounced back twice, it bounced back for the third time. Yes. And after a while, so when the price reaches this line again, so I know what to do in this case. Yeah, so I know that it is definitely better to sell here. Yes, again, so when the price reaches this level, again, so I know that it is better to sell. Yes, and so on and so on and so on. Yes, it is possible that, for example, you can lose money. So on such situations, so when the price rises till this line and it breaks this line here. Yeah. But look, in this case, well, speaking about Forex, there are stop losses. Yeah. Speaking about options, okay, so you just start trading in the opposite direction. So here, for example, you tried to trade down, and here you start trading up. Yes. So and soon you will get your money back. Yeah. Mhm. Can you analyze candlesticks to determine an up or down trends? It's almost, look, guys, candlesticks, they are used to find patterns at first, yes? So not trends. So what are patterns? So for example, so let's look like um, we've got like evening star. So evening star, so this is a bearish pattern. So when the price rises, for example, and after a while, so you see the first candlestick is green, the second candlestick is with a small body, so it can be green, it can be red. Well, in this case, it is red. And the next candlestick is red, for example. So this is an evening star. This is a reversal signal. Or, for example, we've got some type of engulfing. Engulfing, well, here, uh, oh well, yeah, here, for example, yeah. So look, the market rises. So engulfing, it can be bullish, it can be bearish. So here you see that we've got a red candlestick which engulfs the previous green candlestick, and it gives us a signal that the market has to, the trend has to change. Yes, but unfortunately, I see this only on the next candlestick. Yeah, so till this candlestick is in the process, yeah, so let's say so, I don't see this pattern. Yes, so I have a chance to open position only on the next candlestick. Yeah, so this is the biggest problem. Yes, for all indicators, for everything, because there is a lag. So between the price and actually the signal from indicators, from oscillators, from candlesticks, from anything. Okay. Um, so question when and where you can trade if the price is and high or low. Well, I don't understand. Sorry, I don't understand your question. So you mean 12,000 watts? Best indicator. There is no such thing as the best, yes, indicator. So everybody prefers to use, um, well, his favorites. So let's say so. Well, in my opinion, MACD, it's the indicator from Gerald Appel. Yes, well, an American analyst, and actually, I like it. It's great, but it does not work on flats. Moving averages. I like them too, so I always use them, but they don't look on flat, they don't work on flats either. Yeah, so be careful here. Uh, there is not the best one. Yeah. Mm. Last week I learned how to read the Heikinashi candlestick and I started gaining profit continuously. Well, Melvin, that's great. Well, as for me personally, I don't like Heikinashi. This is an indicator. It's not the type of chart. If you make money on this, well, that's great. That's great. So, well, again, guys, you can do whatever you want. So, only the result cares. Okay, so that is the only thing which matters. Well, I think that you will agree with me in this case. Uh, Heikinashi is very slow. Night score is writing well. Agree. What is the best way to face high volatility market? Well, it is definitely well. The best way is to look. There are two possible ways. So the first way, you don't trade. So you don't trade. You stop trading on high volatility markets, especially while speaking about the news. Yeah. So when the very important pieces of news are released, the volatility can be really, really high. So don't trade. The other possible option is to try to trade following the main trends, following the direction of the price. Yes. So if the price starts rising, yes, rising and rising and rising, you just join the trends. Yes. Well, options. What is an advantage in options, for example, that you can trade for a very short period of time, just for 1 minute, for example. Yeah. So on high volatility market, yes, well, lower time frames they can work. That's true, but it's quite risky, so you have to realize it. Um, MACD. This is an indicator. Look, guys, this is an indicator. It's quite simple. These are just two lines and histogram. So let me do like this. Oh well, sorry again. So these two lines, these are two moving averages. Two moving averages and histogram, this is the difference between these two moving averages. And when they intersect each other, MACD gives the signal to buy or to sell. Yeah, so for example, here is the signal to sell, here is the signal to buy. What is bad in this indicator that on flats, it looks like this. Yes, so there is a signal to buy and then the signal to sell. Well, actually, I don't know what to do in this case. Yeah, so well, actually, it doesn't work. Yeah, so here we had some type of a flat, I guess, but sometimes it works really, really great, really great. So that's one of my favorite indicators. Well, you're welcome. SMA 5. Oh, 5, it's not so good. Well, I guess that's at least 9. Take 9. 9 works better. And 921. So guys, well, speaking about periods, look, 921.55. Some people prefer to use 200s. 200s for higher time frames. 200 period, it works great. It works great. So for example, let's look at Australian dollar and US dollar. So if we take EMA or SMA, so if you want simple moving average. So where is it? Okay, so moving average, and so now I will change into 200 the period. Look, you see, well, it is showing the global trend, and the global trend here is bearish. Yes, and it's quite clear. So locally, yes, we have a reversal signal, and locally the price starts moving up, but still the trend is bearish. Yes, and sometimes it works really, really great. Yeah, so 200 is for higher time frames. Could you suggest SMA lines periods? Well, again, guys, well, 21. Okay, so let me write slow. 9. I'm using 9, 21. Sometimes I use 55. Sometimes I use 89. And well, 200. So the following. I think that these periods, they work great. Well, again, guys, speaking about periods, you have to choose the period by the following the following rules. I'm sorry for this, but anyway. So look, at first, uh, the price has to touch this line as many times as possible. Yes, well, as well as support and resistance levels. So, for example, if I'm using 9 periods on Australian dollar and the United States dollar, look, yes, well, the price it touches this line all the time, but there are plenty of false signals too, plenty of false intersections. So, well, in this case, well, I guess here, for example, the period of 9 is not a good period. Yes, well, in my opinion, it is better to change it into 21. So let's look. Now it is much better, you see, because, for example, so here I could bought, yes. So here it was a signal, a very good signal to sell, yes, and so on and so on. So you see that it works better, but still on flats it does not work at all. Yes, so be careful, be attentive here. Uh, the combination, yes, sometimes I use combinations, but look, actually for moving averages, this is like, for me, it's like a very good indicator to define the trends at first. Yeah, so to define the trends. So I want to know what the trend is. And actually, so for example, here you see Australian dollar, US dollar. Local trend is bullish. Locally, so the SMA is moving up. But globally, yes, well, again, so if I change the period into 200, it's bearish. Yes, so we've got two different trends on different time frames. So, well, in this case, uh, actually, I have two possible options. So the first option, um, I wait till the global trend is changed. Yes, so I wait till the price intersects this moving average. Yes, and after that, I start buying. Or the second option is to buy right now. To buy right now, but so let's say so to minimize the sum of money. Okay, so just well, I don't want to risk. Yeah, so I don't want to trade against the global trends. So, but so I minimize the sum of money and I start buying. Yes. After a while, so I will see. So if I lose money, I will not lose a lot. So let's say so. Okay. Mhm. Stochastic. I don't like stochastic. Well, personally, I don't like it. I don't know why. Well, actually, it works. Stochastic, these are just two lines. It's an oscillator. It works the same almost as, well, speaking about like intersections, it works the same as MACD, for example. Yeah, so here I have to, oh, well, sorry. I don't remember the exact settings. So let 5, I guess. Yeah, so 5. So look, guys. Well, this is an oscillator by, as far as I remember, David Lane. So here it's actually it works the following way. So it gives you the signal to buy or to sell when the lines intersect each other, and when they do this in two zones. Yes, so we've got overbought zone. Yes, so it's the upper zone, and oversold zone. Yes, so the lower zone. So when they intersect each other, it's time to buy or to sell. Yes, so well, actually, this is an oscillator, so it means that when the price rises, it's usually it does not give us the price when there is a trend. So sorry, when there is a trend on the markets, usually it does not give any signals at all. Okay, so just be careful because uh, this is another type of indicator. So this is not, these are not moving averages. So let's say so, okay. Stochastic, well, in my opinion, stochastic periods, well, 14, 5, and 3. Yeah, so, well, I guess you can use these periods. Yes, on our platform, so I don't remember. So let's look. We have stochastic here. So if I take stochastic, well, in on our platform, it's 14, 3, and 3. So the same, almost the same. 14, 5, and 3, 14, 3, and 3. So by default, actually, it's okay. So to use them. Yeah, it's okay. So these are like classic periods for stochastic. Yes, that's for sure. Time frames. Look, guys. Well, short trading. So for me, well, a short time frames. Well, I prefer to use hours. Yes. Well, for short. So let's say so short trends. Yeah. For short time frames, for me it's hours. For long time frames, I prefer to use days. So, well, speaking about, for example, forex, you can use days even. Yes. So days, 1 day time frame. Speaking about options, use at least 1 hour time frame. Well, in my opinion, everything works better. Everything. Well, except the situation. So when I had already told this to you. Well, this is about the news. Yes. So on the news, it is definitely better to use minutes. Yes, in this case. Well, you are welcome. SMA 5 and SMA 8, up to you. Well, SMA 5, in my opinion, is too short. This is too short. So if I, for example, if I show you SMA 5 here, actually it's almost copies the price. Yeah, so if we take moving average, oh well, it's here, sorry. If we take moving average with a period of 5, look, yeah, so it almost copies. There are plenty of intersections here. So for example, here the price intersected the moving average and returns back. Here it intersected the moving average and returns back. Well, actually, plenty of false signals can be. Yeah, so well, that is why for me it's too short. It's up to you, of course. Yeah. Up to 90%. Richard, look, we've got like a special VIP group. Well, I guess you are asking about these. We've got VIP traders. Yeah, so actually you can become a VIP trader, but for these please write to our tech support team or to in our social network. So we've got Facebook account, so you can write there. Yes, and my colleagues, they will give you an advice. Yes, so they will consult you about becoming a VIP trader. So VIP traders, they've got higher profitability. Yes, or rate of return. Okay, so if you want. Okay, guys. Well, I think it's time to say goodbye. Well, thank you very much for coming again. So, well, next week I'm on my vacation, so you will deal, yes, with my colleague, and well, I guess that's they will answer all your questions and they will help you with everything, with all your questions. Thank you very much for coming, and hope to see you next time. Bye bye.